Well, we will go ahead and get started, and those that arrive after we get started can join us in progress. I want to welcome everyone to our 2022 retirement seminar. We have some folks here in the conference center, and if you would like to, those of you here, if you'd like to get a cup of coffee, we have a coffee station behind us. Please help yourself. And for those of you attending via Zoom, you'll have to help yourself to your own coffee station wherever you may be. But as we get started today, we will be looking at the retirement benefits that you may be eligible for. And the reason that I say that you may be eligible for is because not everyone has served the same amount of time and may not have earned benefit in all the programs that have been offered in the past. But we will go through both the benefit portion as well, the benefit as far as pension, as well as the retiree health care for those that are eligible. And I will talk about that eligibility, and we'll also look at death benefit for those and talk about the eligibility and those that are eligible for that. Can everyone hear me okay? Do a thumbs up if you can hear me. Okay. One thing I do is just ask that as we are in the meeting, if you'll keep yourself muted, but if you do have any questions, feel free to unmute yourself and ask those questions, or you can also use the chat function and ask a question, and I can respond, answer the question from your chat box. As we begin today, let's start with a word of prayer. Let us pray. Most gracious God, we are thankful for this day and thankful for the ability to come together both in person and via Zoom to celebrate the service of all these individuals who are entering into a season of retirement and rest. Oh God, we pray that this would be a fruitful meeting, that all questions would be answered. And Lord, I also pray for each person as they transition from their full-time service into retirement, but Lord, knowing that we're never truly retired, that we always serve you each and every day. Lord, I just pray your blessing upon everyone here as we all journey together. It's in Jesus' name we pray. Amen.
Amen.
The items on the agenda today, we're going to be looking at the moving expenses. There is a moving benefit for those that are retiring. We're going to be looking at retiree health care, death benefit, pension benefits, and also housing allowance in retirement and how that works. As far as moving expenses, those that are moving from a parsonage or their rental property or home that they are currently living in and moving into their retirement home, the Conference Board of Pension and Health does offer an $1,800 moving grant for each of those persons, and up to $350 of that $1,800 can be qualified packing expenses, so boxes, tape, things of that nature. And in order to receive that reimbursement, once you have your receipts, if you'll just send those receipts to me, and then I can send that over to the treasurer's office for reimbursement. We just ask that you do that no later than September 30th. So just be mindful of that there is that benefit, and please be sure to utilize that as you may move from your parsonage or where you're serving to a retirement destination. Are there any questions on the moving expense? Retiree health care, there are a couple of ways that you can benefit in health care in retirement. Now, the eligibility for retiree health care is that you must have been covered under the HealthFlex health care, the conference health coverage, 10 years consecutively and continuously prior to retirement. So for the past 10 years, if you have been on the conference coverage, you are eligible for retiree health care. There are two offerings for post-65 retirees. There is a standard plan, and also you can do an individual coverage for your health care. Now, one caveat to this is that you must be covered under Medicare Parts A and B in order for this to work. If you opted out of Social Security, as some clergy may have, you need to talk with the Medicare office to see if you can enroll in Medicare and what that process would be. Because again, this benefit only works if you are enrolled in Medicare Parts A and B. If you are retiring pre-65, you can continue on the conference coverage Health Flex until you reach the age of 65. However, the price structure is you would still continue to receive the subsidy for the retiree health care, but typically the cost is much more expensive because the church, in a typical situation, the church pays part of that cost, and then you pay part of that through payroll deduction. So in retirement, it's a little different. So if you are pre-65, just talk to me about that, and we can go through that on an individual basis. Also, for retiree health care, if your spouse was covered a minimum of 5 years continuous and consecutive prior to retirement, he or she is also eligible for the retiree health care. And once again, if your spouse, you may be post-65 and your spouse pre-65, and we can look at those individual options to see what the cost would be for those that are pre-65. The cost for the, the standard plan for those that are 65 or older, the Medicare supplement is, the cost is $381.56 per month. You would also receive a $100 per month subsidy, so your out-of-pocket premium cost would be $281.56 per month. This is the standard plan. It is also outlined in the document that I just sent everyone via the chat box. Those of you that are eligible for this will receive an enrollment packet from AmWinds. So please keep an eye out in your mail for this. If you do not receive it by mid-May, please let me know so that we can follow up with that. I know the Postal Service has been a little crazy, at least my experience lately. So if you do not receive it and are eligible, please contact me so I can check on that for you. As far as the individual coverage options that are available, when you receive that enrollment packet, if you want to explore individual options, you can touch base with AmWinds and they can look at those options for you. Many times it is less expensive than the group plan, but just remember, anytime the premium is less expensive, the out-of-pocket is typically higher. For example, the out-of-pocket for the standard plan, the maximum out-of-pocket would be $1,500 in a year, in a calendar year, and that also includes the Medicare Part B deductible. So the most you would pay out-of-pocket for any medical expenses would be $1,500. So if you do an individualized plan, your out-of-pocket may be much higher, but the premium would be less. So for example, you may find Medicare supplement coverage and prescription coverage for $150 a month. The conference pays $100 towards that, and it would be $50 premium for you. But if you utilize it, it may cost you more out of pocket at that time. So you'll just need to weigh your own personal health situation to see what's best for you. Just know that if you are approaching 65, you are probably inundated with calls, mail, email wanting you to sign up for benefit. And some will even say they are with Medicare. Medicare typically is not going to call you unless you have already contacted them. So the person on the other end of the line is typically a salesperson trying to sell you insurance. If you enroll in the conference coverage and in the future switch off of the conference retiree health care, you cannot return to it. So just be mindful in future years, once you enroll, that we've had a couple of situations where people have kind of been tricked into switching coverages, and it's been a bit of a battle. We're able to stop that, but typically if you your enrollment ceases through AmWins, through the conference, that you're not allowed to return. Medicare Parts A and B, if you have not already signed up for Medicare, do so immediately. Medicare typically is slow at times for enrollments to be processed, so we say give it at least 3 months. And if you are not enrolled in Medicare, please do so with a 7/1 effective date, because there's no reason for you to pay for Medicare Part B and the conference coverage at the same time.
I called and they told me I had to put down 6/1.
Okay.
When I did my form.
Okay. Also, you may need if you are post 65 and not enrolled in Medicare, there is a form that I fill out that states that you were part of a qualifying group health plan, so you will not be penalized. So if you are enrolling in Medicare and you're already past 65, just let me know and I'll fill that form out and email it to you. Are there any questions so far?
I want you to go back over the healthcare again.
Okay.
Standard, you said, is $381 per month, but
The standard cost is $381.56 per month for the standard plan. Right. The conference pays $100 per month per person.
And I would pay $281.
So you would pay $281.56. That's correct.
Okay.
But if you wanted to do an individualized plan, if you go through AmWins, whatever that premium is that they quote you, then we would pay $100 towards that.
Okay.
Are there other questions?
Chris, I have a question.
Yes.
Is this for local pastors or just elders? For this
It is for persons who have been on the conference coverage for a minimum of 10 years continuously and consecutively at retirement. So in order to be eligible for the retiree health care, you have to have been on the conference coverage, the Health Flex, for the past 10 years.
Okay, gotcha. Thank you.
And that's the caveat to this. Some of this may not apply to everyone, but this is for those that have been covered under the conference coverage, and that is local pastors and elders.
Okay. Thank you.
You're welcome. Are there other questions? Again, Medicare considerations, please be sure to sign up for Medicare Parts A and B. If you have not already started that process, please do so promptly. If for some reason you are delayed and Medicare cannot begin by July 1st, we can extend Health Flex for you for a month or so, but we need to know before July so that we can process some paperwork on that. Again, if you've opted out of Social Security, please contact the Medicare office for available options, because the Medicare A and B is required for supplemental plans. Are there any other questions? We're going to move on to the death benefit and retirement. The 2022 retiree death benefit for clergy is $20,808. And I want to go ahead and say there is an eligibility requirement for this, and that is on the next screen. And I'll go over that in just a moment. You also, for those that are eligible, there's retiree, the spousal death benefit. If the spouse predeceases the clergy person, it would be $15,606. A surviving spouse, it drops to $10,404. And then if the retiree has a minor child, there's an $8,323 death benefit. The eligibility for the death benefit for those that are currently retiring, any of the 12 of the 15 years immediately preceding retirement, or at least 25 years, you must have been enrolled in the CPP death and disability benefit. So if you have served, say, 15 years, a minimum of 12 of those 15 years, you would have needed to have been enrolled in CPP. If you were enrolled 3/4 time, or if you were serving 3/4 time or full time, you were enrolled. If you were less than 3/4 time, you were not eligible for the CPP death and disability benefit. If you have questions about that, we can look at that individually to see if you are eligible or not. So that just remember that not everyone is eligible for this benefit, but many times what happens is when the time arises and I record a death, many people do not know there's a death benefit. And then sometimes there are some that expect it and then they're not eligible. So this is a good thing to find out early on the eligibility. Also, as a reminder, please be sure to keep your beneficiaries updated, not only for the death benefit, but also for your pension. In the event of your death, any available pension and any eligible pension would go to your beneficiaries. So, for example, if you are married and your spouse dies, be sure to update that beneficiary so that it's not going to an estate situation and get caught up in probate. Are there questions on the death benefit? Okay, we're going to switch over to the pension plan, and there are multiple components, multiple pension plans that you may have served under. For those that served prior to pre-82, there's the pre-82 pension benefit. From 1982 through 2006 is the ministerial pension plan. And from 2007 onward, we have the Clergy Retirement Security Program, also known as CRISP, which is a defined contribution, defined benefit hybrid plan. And then also there's UMPIP, which is the United Methodist Personal Investment Plan, and some also refer to that as PIP. These are the components of the pension. So if you served way back before 1982, you will have all of these. If you started serving 2007 onward, you'll just have the CRISP and the UMPIP. So as I go through this, know that not everyone has a benefit under each of these categories. The pre-82 plan is strictly a defined benefit plan. where a participant receives a dollar amount per year of service, and that rate for 2022 is $846 per year of service. So if you had an individual that began serving in 1978 and served through the end of 1981, that would be 4 years of service. So they would receive $843 times 4, which would be $3,372 annually, which is, it would be paid monthly. So you divide that by 12. So that benefit would be $281 a month. This benefit does increase at 2% a year for cost of living by the plan. And if you are serving under the pre-82, you do have benefit under pre-82. Upon your death, any spouse would be able to receive 75% of this amount. Now, some of the other pension plans that we talk about, you're able to select a percentage that your spouse would receive, but pre-82 is a little different because it does have a set amount for spousal benefit. The ministerial pension plan is an account-based pension plan where funds were deposited into an account in your name from 82 to 2006. This plan, when you receive your statement, or if you logged in online at WestPath, you'll notice an account balance. But at the time of retirement, 65% of that MPP, ministerial pension plan balance, is used to purchase an annuity, which is a lifetime income for you. So you'd receive a lifetime benefit for you and your spouse. And then the remaining 35% remains as a contribution account. So that can be distributed how you would like, whether that's monthly, a lump sum, roll that over into the UMPIP account, however you would like to utilize that. One thing to note, for those that serve the entire time through the MPP years, you probably have a significant amount in that MPP account. When you receive your statement after retirement, it'll look like a lot of your money has disappeared. It has not. In essence, it's because 65% was used to purchase that annuity lifetime income. But I just want to bring that to your attention because it's always somewhat of a shock when you look at that second quarter statement and then when you get your third quarter statement after you have annuitized on the MPP. The Clergy Retirement Security Program is a hybrid pension plan that consists of defined contribution, which is a contribution account in your name, and a defined benefit, which is a standard pension benefit where it's based off of years of service. And again, this became effective in January of 2007. If you log into your WestPath Benefits Access account and scroll to the bottom on the summary page, you see your defined benefit amount. And that is not taken, sometimes there's some confusion, it's not taken out of the account balances, it's just a standard benefit. So it's not reflected in any account balance because it is based off of years of service. And how that is calculated is two different calculations. If you serve from 2007 through 2013, you take 1.25% times the denominational average compensation at the time of retirement times the years of credited service. And then from 2000 afterwards, after that first initial period, after 2013, it's 1% times the DAC times the years of service, and divide that by 12, and then you would get your defined benefit. And that is if you are retiring under full retirement, and that's either age 65 or 40 years of service. If you retire after 30 years or at age 62, it is actuarially reduced, which there's a small reduction in in that benefit. Here's another example with some real numbers. So the 2022 denominational average compensation is $75,570. So you see that calculation, 1.25% times that DAC times 7. Those 7 years, you get the total amount divided by 12, so your benefit would be $551.03 a month, plus from 2014 onward. You see that amount, and the benefit would be $991.86 total if you add those up. But again, look, when you run your pension projection, or if I've run one for you, you'll see that benefit that you would receive in addition to your contribution accounts. The Clergy Retirement Security Program is for those that were currently full-time. In the early years of the CRISP plan, less than full-time did have eligibility in this. So if you have served part-time your entire career, you still may have some defined benefit available to you for the 2007 through 2013 years. Are there any questions before we move on? On the, continuing on the Clergy Retirement Security Program, on the defined contribution portion of that, and this also holds true for the defined contribution under CRISP, the remaining 35% of MPP, and also the UMPIP. You may take your account balances through monthly distribution until it's exhausted. You can do a lump sum, you can do partial lump sums, or you can roll over to another retirement account on your account balances. I always want to remind folks that if you are looking at doing a lump sum, a partial lump sum, WestPath will withhold 20% of those funds by law for federal income taxes. The other thing I want to impress upon you is if you are going to do a lump sum, please contact your tax professional and talk about what that will do to your income tax, because you may have an undue tax burden that you're not expecting. It may put you in a different tax bracket for that year. If you are looking at rolling over into another retirement account, and we'll talk about this in just a moment, up to 100% of your benefit from WestPath can be classified as housing if you have qualified housing expenses. If you roll it out of WestPath into another retirement plan, say an Edward Jones or some other organization, you would lose that housing allowance benefit on that. Also, if you have a financial advisor and they're encouraging you to roll that over under their care, be sure to ask them the fees that they have. Some have annual fees, some have fees that it costs to do that rollover. In essence, it is that person's commission. So just be sure to ask those questions. I'm not saying don't do it, just be sure to ask those questions, because sometimes they can be excessive, and with WestPath, you do not have to pay those types of fees. The UMPIP is the United Methodist Personal Investment Plan. These were funds that you contributed through payroll deduction into the pension account. UMPIP is a 403B, which is a nonprofit version of a 401k. For those that are less than full-time and you contributed to your pension, the church may have put a contribution in that as well. So if you remain less than full-time, you may only have UMPIP. You may not have any CRISP benefit. Again, with this is a contribution account that you can receive benefit and take distributions until it's exhausted. Once again, you can do a lump sum, partial lump sum, or roll over into another retirement account. What questions do we have so far?
Are you gonna come back to the housing allowance and exclusion?
Yes, I'm gonna talk about that in just a moment.
Can I ask a question?
Huh?
So if one of our participants is 72 and they'll have to take mandatory distribution,
Mhm.
how does that affect it? I mean, I know that they'll have a monthly income, but then they have to take that over and above. I just was wondering for our ones that have worked so hard and
Right.
now we're kicking them out.
Lynn is referencing what's known as required minimum distribution. For example, if you set up your benefit and you had your MPP annuity, your CRISP DB, and we're living off of that and not utilizing your the remainder of your account balances, when you reach the age of 72, the government wants you to start pulling that money out, so in essence, so that it can be taxed. WestPath will send you notification of your required minimum distribution. It is kind of a convoluted formula that the IRS comes up with, and WestPath they're experts in that formula. And WestPath will send that money to you so that you're not penalized by the IRS if you are not already receiving that required minimum distribution. But if you have for example, if you have your pensions, your UMPIP, your contribution account set up in life stage retirement where you're receiving it monthly, more than likely you're going to hit your required minimum distribution, and there won't be an impact on that.
Gotcha.
It's typically for those that aren't taking enough out. And there's some pretty if you don't take it out, there's some pretty hefty taxing penalties for that. And WestPath makes sure that you're not taxed on that.
Would you be taxed monthly on your retirement?
You can set it up when you sign up for your benefit for them to withhold federal taxes.
Oh, okay.
It's up to you. They can either do it or not. It's up to you. They do not withhold state taxes. They can do federal.
They can do federal, okay. Yeah. You can do 10 or 15%.
I think you can set it up to pretty much any amount that you want.
Okay.
Are there other questions? One of the biggest questions is how to sign up. And that's probably one of the most important questions. I want to go ahead and give you a date, June 25th. Be sure to sign up before June 25th if you want your benefit in July. If you don't sign up by June 25th, you may have to wait till August 1st to receive your first benefit payment. So just keep that in mind. And how to sign up, the easiest way to sign up is by logging into through WestPath's website under the retirement benefits or benefits access and signing up through benefits access. You can request forms from WestPath and do it by paper. I have seen those forms. It's easier to sign up online.
Well, Chris, you could just do a mass sign up and all of us come in here and we just sit down and you work us through it.
I don't know that mass would be good, but I will do it one-on-one.
Okay.
So between now and June 25th, if you need assistance, feel free to make an appointment with me. Come in and we can sit down and make sure that everything is how you would like. And sometimes that's easier because if you have questions, I can answer those questions. Westpath is always there. They can help walk you through it as well. But you can't sit down with them in person
No.
to do that. And I am available to do that for you.
I tried that with them, and you don't know what to ask sometimes,
Right.
and they think you know.
Mhm.
I don't like that.
Yes, Murray?
Yes, question on that supplemental plan for the healthcare. Is there any way it could be connected to the account retirement, that it's deducted before we receive anything? Or do we have to take care of that payment on our own?
You would have to take care of that payment on your own, and typically what AmWinds does is, in the enrollment process, is you set it up for a bank draft.
Okay. Okay.
But there's not a way to draft it from Westpath
Okay.
before you can receive your benefit.
Thank you.
Jimmy?
Yes, did I hear you correctly when you said that we could come in and talk to you one-on-one about the benefits for 72?
Absolutely.
Okay, so, sure.
Yeah, just if anyone would like to schedule an appointment, actually what I'll do is I'll send out an email to all retirees with dates, calendar dates, and let you all sign up for those available slots.
Thank you, sounds good.
If you have not already signed up and registered for benefits access at Westpath, please go ahead and do so. When you log into benefits access, you'll be able to see your account balances. You'll be able to open up your statements, your prior statements. You can see transaction history. There's a lot of things that you can see through that portal. If you are covered under healthcare through the annual conference, you can even log in. It'll even have your health benefit out there. So there's a lot of information that is on that. But again, it's very important to go ahead and do that and be ready to utilize that to sign up for your benefit. One thing that Westpath does require is a two-factor authentication. So you will need a cell phone because they will text you a code to log into that account every time you log in, and that's for security purposes. So when you do that, just be sure to have a cell phone. And if you have not updated your information with them, or if you think that you may have an outdated number, let me know and I can check on that for you.
Yeah, that's good. I just did the other day. They use that code real quick. And
Right.
You got 5 minutes to use
Yeah.
the code.
Right. Yes.
Let them know that underneath where, when they go in and they have never accessed, benefits access before, then underneath that secure login, it'll say register here, does it not?
Right. It
Normally.
says new user registration. So if you have never registered, you're actually going to click on that and it'll walk you through that. Okay, I have the Smith family has raised their hand.
If I
You're
did,
muted. There
if I
you go.
did, it was just scratching my head.
Okay. Oh, it's the on the larger screen that we have in the conference center. It's actual hand. It's the cursor. It's on your profile. I'm sorry.
Oh, okay. Yeah. I actually, Chris, a question came up from my wife last night, and I thought it was a decent question. She wondered, does Westpath withhold tax on your monthly distributions? Do they withhold any tax on just your regular pension distributions?
They can. It's up to you. You can set it up to you can set it up so that they withhold federal taxes. They will not withhold state.
Okay.
But, or you can continue doing your quarterly taxes.
And that was the second question, is in retirement, can you still do quarterlies like I've done for all these years?
Can.
Okay. I did not have any clue. Thank you.
You're welcome. Just some other considerations on the pension. Again, you'll need your cell phone for security reasons. Have your banking account and routing number handy when you are ready to sign up for benefit, because you will need both of those for direct deposit. Also, you'll need to know the phone number to your bank. If you do have any issues or troubles logging into the benefits access system, you will have to call WestPath for help with that, because I do not have access to login credentials. Their number is 800-851-2201. And when you call in, you'll need to speak with a member of the retirement team. Any other questions? One other thing to note, under the benefits access portal, you also have the ability to run a pension projection. If you have not run a pension projection, I encourage you to go ahead and do that. Or you can let me know and I can run it for you and email it to you. But that's very helpful to give you an idea of what your income, your benefit will be beginning in July. Now, as far as the housing allowance resolution, it can be found in the Board of Pension and Health report to annual conference. We update that every year, and it is adopted at every annual conference. We also place that on the conference website. Your tax preparer in 2023, when you file your 2022 taxes, may want to see that resolution to verify that that is the case. But up to 100% of the funds received from WestPath can be classified as housing. So if you have a mortgage, taxes, utilities, any housing related expenses, be sure to keep track of that so you can determine what that amount is. Typically, the question that comes, we do that on the ministerial support form right now, as we have housing or the utility parsonage exclusion, where we name that amount for the following year. You don't have to do that in retirement, but you do need to still keep track of, have your backup data in the case of an audit, so you can prove what you're claiming as housing expenses. And again, as a reminder, if funds are rolled out of WestPath, then that housing allowance option is no longer available. If you roll the funds, so if you took all your retirement and put it in, say, Edward Jones,
Okay,
then you no longer can claim it as housing. It would just be straight income.
so the exclusion would be your, utilities, what would it be?
Utilities, if you have a mortgage, taxes,
That's the key word, mortgage.
yeah, mortgage. HOA, if there's HOA fees, if you got a mortgage, that's your big one right there.
That's my big one.
If you had to put a roof on the house,
Okay.
things like that. I think you can also claim toilet paper for, I
Yeah.
think that's one of the things too. So anything that you can claim,
Yeah.
anything you can claim now, you can claim
Yeah.
in retirement too.
Okay.
Are there other questions?
Yeah.
Chris,
Well, again, go ahead.
is there a maximum for the housing allowance exclusion?
It's up to 100% of what you receive from WestPath.
So it doesn't matter 20,000 or 30,000? Okay.
It does not, as long as you can verify those expenses.
Okay.
Hey,
Thanks.
Chris, question.
Sorry?
Yes, so when you say the funds you receive from West Path, does that include the funds that I put in on the 403 plan or 401k in the West Path?
Yes, it includes all of the plans. So if the benefit that you're receiving is coming from the MPP money or the CRIS money or the UMPIP money, it does not matter.
Okay, thank you.
Okay. Are there any other questions?
So Chris, I'd like to ask this, based on your experience, knowledge of other retirees over X number of years, what are the biggest difficulties, problems, or frustrations, if there are significant ones of these that retirees run into and say to you a year down the road, gee, I wish I'd done this differently or better?
I think the biggest comment that I get is people wish they would have put more in their retirement years ago.
Oh, okay.
And that's the challenge when you get to retirement, because then you can't go back and do that.
Right. Right.
And the other struggle is with Medicare and Social Security and just dealing with them.
Okay.
But from the standpoint of the retirement, the process with WestPath, it's pretty smooth.
Mm-hmm. And another question: in retirement, all this terrific use of Ernst Young or EY, is that still available to retirees?
That is still available, and I encourage those of you that are retiring, if you have not spoken with them, now would be a good time to go ahead and reach out to them, and then you also have that access after retirement.
I'm sorry, I didn't hear the question.
The EY, the Ernst & Young Financial Planning.
Okay.
I think that's, something that need to be discussed with young people coming out of seminary.
Mm-hmm.
Those first 10 years, I served churches where I was not able to put anything in.
Mm-hmm.
Right.
Because the salary was
Too low.
and student loans too high.
Right. I understand.
Yeah.
And Lynn and Stephanie both are really good when we get ministerial support forms, especially with the new folks,
Yeah.
and we see that they aren't contributing anything to pension. You know, we're reaching out and say especially if you're full-time, you're leaving money on the table because you're not getting your full contribution.
Yeah.
So we're trying to encourage folks to do that.
Yeah, the first appointment had that old lien, where I had one church where could not pay apportionment, or any kind of pension, so there was a lien placed against my, I know that went away after a while, but.
That practice was
Antiquated.
right.
Yeah.
And the other aspect of it too is some of you may have served churches where they are behind in their direct billing. That does not have an impact on you personally because the conference has paid into the pension. Even though we have not collected that from the church, it still has been paid into your pension account.
So Chris, when will you be sending out the information for the setup meeting with you?
I will do that by the end of the week.
Sounds good.
Get in line, Jim.
The benefits running out.
Right.
Over the years of your experience, have you ever known this to happen?
The only person that, in my time here, I've only talked to one person that their contribution account exhausted, and it was an individual. I think they were in their 90s, and they called and said, I don't have as much in my check, and I'm like, well, your contribution account exhausted last month. Now, there are some that go into retirement knowing that what they have is not going to last them for their life. And typically those are the ones that maybe were late second career. They usually have another pension or something from prior employment. But for those that have been in ministry for, the bulk of their career, bulk of their life, you have all the defined or lifetime incomes that will carry you through. So if you have the lifetime income, it pays until as long as you're living. It's what runs out are the contribution accounts, your UMPIP, things like that. Now, there are some that may have a considerable amount in their UMPIP, but they take it all out to buy a house. Then that's going to be exhausted fairly quickly. It just depends on each individual situations. But again, those that have done the monthly until exhausted, I talked to one.
And then what happens to the remainder if you only live, say, 5 years after retirement?
Say, for example, you live 5 years after retirement. Whatever's in a contribution account goes to your beneficiaries. If you are married, it goes to your spouse unless they have given that right up. For the lifetime income, the CRIS DB, the MPP annuity, and the pre-82, you can, other than the pre-82, the MPP and the CRIS DB, you can say my spouse receives this much, 100%, 70%. You kind of elect those between those two options. If you're unmarried or in certain situations, there are parts of the plans where you can say, I want to make sure that it pays 5 years or 10 years certain, which means if you die, it will pay to somebody for 5 years or 10 years. But if you elect those options, then it reduces the initial amount of payment. Typically, when somebody uses that, is say they're retiring and they've got a terminal illness and they're not expected to live, they may want to elect that option so that somebody will get that benefit if there's no spouse. So if you say, okay, I want to do the 10-year certain, and you retire and you die after a year, then for 9 more years, whoever is your beneficiary will get that benefit.
Okay.
They won't cease upon death. And that is an option when you sign up in the benefits access. You'll see that as an option.
Make sure I didn't want my son to quit his job.
You can also make a trust your beneficiary too, so you can put all kind of restrictions on it in a trust.
Okay.
Hey, Chris,
Are there other questions? Yes.
when you are filing income taxes in retirement, would we still file as being self-employed to get that housing allowance? Or
You would actually file, you receive a 1099-R. So you would file as a retired person.
retired pastor?
You're not going to. You would still be, you're still clergy. So yes, you still want to say you're clergy, but in retirement, you're not employed, so you can't claim self-employed.
That's the reason I'm asking.
You're just retired.
With retired clergy, which would give us that housing allowance.
That gives you the ability to do that housing allowance. And if I remember correctly on some of the the 1099s that I've seen from WestPath, on that 1099, it puts that in a housing box, not an income box.
Oh, okay, great. So in other words, once we get that 1099, the housing allowance will already have been put in the box.
If I remember correctly from the last one I looked at, it shows up on as a housing allowance.
Now, what about if the housing allowance, your housing allowance exceeds what we get from WestPath?
if your housing exceeds what you get from WestPath, then you just claim 100% of what you receive from WestPath.
Okay. Only.
So if you receive $20,000 from WestPath and your housing expenses were $30,000, then the entire 20 from WestPath would be classified as housing.
Okay. Thank you.
You're welcome.
And I'm hearing everything has to be done by June 25th.
June 25th, yes.
Can I ask the question?
Yeah.
Okay, so if they wait till June 25th, how quick would it be to, I mean, if it's that and Medicare is being done, how long does it take to get on with, Amwins?
Amwins, those of you that are going on to the retiree healthcare Amwins, June 25th is the deadline for benefit at WestPath. You will have your Amwins enrollment packet, should be in May. As soon as you get that, go ahead and fill that out and send that back in. But your supplement plan, if you're covered under HealthFlex, the conference coverage, you'll be covered through June 30th on HealthFlex. July 1st, you will be covered on Amwins, Medicare. The goal will be Medicare A, B, and Amwins retiree coverage. You're eligible. Does that answer that?
Mm-hmm.
Okay.
I hope everybody else understood.
And if you don't get the, Medicare B in by a certain time, then you have to wait another year. They give a cutoff date on that.
Well, because you're retiring, you are you can enroll in Part B at any time if you're retiring and have the form that I fill out.
Yeah. But you have to have that in by a certain date too, before retirement.
Yeah, if you're not already set up for Medicare, especially Part B, again, do it as quickly as possible because they move kind of slow. So we're done. I'll call him back.
You want me to call him back and let him know?
It's Will Harper. If you'll just go call him and let him know that we're done, and we'll. Are there any other questions?
Chris, I have one based on the letter I got from WestPath on the 29th of March. What should you do next? And number 2 was consider life stage retirement income. If I signed up for that 10 or 12 years ago, I don't have to do that new, do I?
The life stage retirement income is the life stage retirement income is something that you would elect, that you would start at retirement. The life stage investments is what you would be doing until retirement.
Until then. Okay. That helps. Thank you.
And basically the life stage retirement is where you take your contribution accounts on a monthly basis until it's exhausted, and they kind of calculate the amount for you so that it lasts as long as possible. But even in the midst of that, you can still do a distribution. If you needed a new roof or needed to make a purchase on something, you could still take a distribution on your contribution accounts in addition to that. So even though it's you're signing up for something, you're not completely locked in to that. It's flexible.
So we haven't used our, what do you call it, HealthFlex monies by retirement, we lose that?
It depends. It depends on what HealthFlex plan you're in. The question is, if we haven't used our HealthFlex money, do we lose that? If you are enrolled in a HealthFlex plan that has a health savings account or a health reimbursement account, those funds are yours to use into the future. If you have a plan that you have a flexible spending account, you can only use that for medical expenses through June 30th. You have a grace period after June 30th to file claims on the money before June 30th. My recommendation to you, if you do have a flexible spending account, and that would be with the typically with the B1000 plan, most people would have that, but you can't have it on any flexible spending on any plan. I can look at that individually for you to see what you have, but specifically a flexible spending account, use it before June 30th if you can. So if you are retiring and you have flexible spending and you don't have any expenses, but you might want to get some new glasses, go ahead and get some glasses, dental work, go to the FSA store and buy stuff on the FSA store to utilize all of that. But I can look at your individual circumstance and see. But again, if you have a health reimbursement account, which is would be one of included with one of the C plans, or an HSA, those carry into retirement, so you don't have to utilize those right away. Are there other questions? Well, I thank you all for joining us today, and again, look for your email. I will send out a link to schedule an appointment with me so that you can meet one-on-one if you need to. And again, if you have any other questions after this, just feel free to give me a call or send me an email. I'll be glad to help any way we can.
Thank you, Chris.
Y'all take care. God bless. You're welcome.